Hey guys, Realtor Adele, your favorite realtor and investment property strategist. Apologize for the late post for August. I had a bit of a personal hiccup, but all is well. Let's dive right in with this month's housing market report. We'll review home prices and affordability, housing inventory, and of course, mortgage interest rates. We are well into the third quarter of 2023, and the housing market remains sluggish due to high mortgage interest rates as we try to get a handle on inflation. A few days ago, rates landed at 7.18%, which is down from last week's rate of 7.25% for a 30-year fixed rate mortgage. As current home owners who may have been thinking of selling and buying another home are deciding to put those plans on hold until rates stabilize, new construction continues to lead the way as builders provide creative solutions through their lending partners to help make home purchases more affordable for buyers. We'll get into all of this and more as I break down what's happening in the housing market. Last summer in June, we saw home prices peak as the demand from buyers increased. As home prices rose, so did interest rates. This resulted in a slowdown. That ultimately led to many property owners reducing their asking price. This trend continued throughout the remainder of 2022, and even today there is still some residual of that. Two important things to note. When that happened, there were a lot of headlines insinuating a housing crash and that prices were going to fall 20%. A year later, clearly that's not the case. Those price reductions were really price corrections due to the fact that the market just could not bear the current prices. Clearly, there is a high demand for housing, and when there is a low inventory or lack of inventory and you own a home, you're going to kind of overextend your price, push the envelope to see what you can get. This is what happened last year, and in June that peaked with rates, which when combined is not sustainable. Hence the massive reduction in home prices, which in all reality, as mentioned, that is more of a price correction. Let's take a look at the following slides for further information. In regard to home prices, keep in mind that buyer demand and inventory affect prices and home values. Inventory is still relatively low in most markets. In the coming months or in the coming weeks and months, you may see reports stating that home values are down. Note that real estate is seasonal, with the majority of people moving during the spring and summer months. As a result, buyer activity during those times are elevated, along with home prices, since demand tend to drive prices. With limited inventory, there is a direct impact on prices and home values. This chart shows the non-seasonal adjusted month-over-month home prices from 1973, and yes, you heard me correctly, 1973 through 2022. This is important to note in order to get a true idea of home price appreciation. For the past 48 years, you can see that there was no real loss of overall home values. As mentioned, real estate is seasonal, with the majority of buying and selling occurring during the spring and summer months. During the fall, there is a slight decrease in buyer activity, and during the winter months, as we settle into the holidays and festivities of the season, even more of a slowdown. This chart will show you what's happening with home prices for this year. Using the same comparison as the chart before this one, note that this is the most updated data. This chart is up to May of 23. Once the year is completed, we'll have fully updated stats, and I will share those at that time. So far for the year, this is how we're trending. Now you can see that things got a bit unrealistic last year from the chart before. The correction was made. Now we're in a more normal market appreciation-wise, which is what this chart shows. On the next few slides, you will see a similar sentiment from a few of the major housing indices. Note that when you see home price appreciation decelerating, keep in mind it's not overall value that's being referenced. It's the pace at which appreciation is happening. Let's take a look at what's going on in the Atlanta housing market. This chart shows you the greater Atlanta area, and you will see that the following counties are the ones that are being referenced, or this is the data for the following counties: Cherokee, Clayton, Cobb, DeKalb, Douglas, Fayette, Forsyth, Fulton, Gwinnett, Rockdale, and Paulding counties. The top part of the chart shows the single-family detached homes, and the bottom half will be for attached, which are condos and townhomes. Pending sales we're going to start with the single-family detached homes. Pending sales were 3512, closed sales 3593. As mentioned in previous videos, when the closed sales are greater than the pending sales, sometimes that's a situation where there may have been homes that were under contract from the month before and that are now closing in the current month. Days on market until sale 23, average sales price for single family detached $541,059. Percent of list price received 99.9. So sellers are getting, I'm going to call it 100% of their asking price. And then the month supply of inventory is just over 2 months. For residential attached, pending sales 1,023, closed sales 1,021, days on market until sales 30, average sales price $401,857, percentage of list price received 99.5, so that's close to 100% of the asking price, and month supply of inventory is just over 2 months. As mentioned, mortgage interest rates are at 7.18 as of a few days ago, the end of August to be exact, and that is down from 7.25. What you're looking at, this chart shows you the historical perspective for inflation. So we've been here before collectively, and here is an interesting, not so fun fact that, and you will see in the gray circle, you can see where rates got up to 14.6%. And this chart shows from 1972, or should I say the gray circle is what I want to draw your attention to. And the gray circle indicates from 1972 through 1981, where inflation was elevated more than they are now, and rates got as high as mentioned to over 14.5%. Are we experiencing, or will we experience, a repeat in history? Hopefully not. And that's what the feds are working to tame or control, is the rate at which inflation is rising. And they do that. This requires a delicate balance. So in order to slow inflation, there's a bit of a catch-22 because you have to make things unaffordable. In this instance, we're talking about housing or mortgages. So by making mortgages unaffordable or less affordable, that slows down the buyer activity, slows inflation, then the rates come down. However, what they are trying not to do, what you're looking at in the gray circle, is when they drastically dropped rates in 72, rates drastically dropped, but then they shot back up as a result. So again, this requires a delicate balance. The Feds are actively aiming to slow inflation by influencing the rate at which mortgages increase. Now, the Feds don't determine rates, but they do influence it. And so this will require a bit of patience for us all, especially those who are wanting to purchase homes but haven't been able to do so due to elevated interest rates. To recap, home prices and values remain stable in most markets. Home prices continue to appreciate, however, the rate of appreciation will slow due to seasonality. Housing inventory is still relatively low in comparison to historical levels. Some property sellers are deciding not to sell since it would mean that they would end up with a higher mortgage rate on their next home than they have on their current home. Due to limited housing inventory, new construction homes have been a welcome relief for qualified home buyers. Home price reductions are mostly price corrections. Overall, home prices and values remain resilient despite the turbulence with mortgage interest rates. The average sales price for single-family detached in Atlanta is $541,059, and the average days on market is 23. Average sales price for attached homes is $401,857,000, and the average days on market is 30. Current housing inventory for both attached and detached is just over 2 months. As always, it's my goal to provide you with accurate information from trusted sources so that you can make the best decision for yourself and your family. If you have any questions about the real estate market, please leave them in the comment section below. If you're interested in buying, selling, or investing in real estate, please don't hesitate to contact me. All of my contact information is provided within the slides of this video. By the way, please do me a huge favor, like this video, share, and subscribe. And that's all for now. Till next time, take good care.